Welcome all y'all to my Accounting 1110 final review for the final exam. The goal is to review how able a business is to pay interest on its debts by utilizing the times interest earned ratio. You'll recall throughout your entire studies of Accounting 1110, we have taught you our goal is to learn how to do financial reporting, and the reason we're doing this at all is to give financial statements to outsiders, and that outsiders will use these to evaluate how well we're doing. One way that they use to do this is to evaluate us using the times interest earned ratio. And this ratio simply tells you how many times a business earns its interest expense during the course of an accounting period, and allows you to evaluate how able they are to pay that. The higher the ratio, the less risk there is involved that they won't have enough money to pay their interest as it comes due. Let me give you some facts. I'd like to use a whole income statement in our facts because problems can give you information that either by giving you an income statement or by giving you just little pieces of information. I want you to be able to pick it up no matter what. So we have a business that has revenue of $100,000, operating expenses are $80,000, operating income is $20,000. We separate interest expense and income taxes out of operating income because they are more administrative or other types of expenses. They're not operating expenses. And the net income for the period is $17,500. The formula for our times interest earned ratio is to take earnings or net income before interest and taxes and divide that by interest expense. Your author didn't tell you this, but I will because it's kind of a fun name. This is called the EBIT, earnings before interest and taxes. Not an unusual term to hear in an accounting office. We like acronyms. So let's apply that to our income statement. Our earnings, or our net income, is $17,500, and we add back to that our income taxes, and we add back to that our interest expense. Or in other words, I have operating income in my numerator now, and I'm now dividing it by interest expense. If you're given an income statement, you can graph this number. If you're only given net income, remember you got to add these two back on to get to it. Just remember that. So, 20,000 divided by 1,000 is 20. Our times interest earned ratio in our example, therefore, for this period, is 20, as I just showed you how to calculate. And as is always the case, a ratio taken by itself isn't very interesting. We like to look at it over a trend or a period of time and to compare it with our competitors or with others in the industry. Let's pull up some years out. Let's say we're looking at 2010, 2011, 2012, boy, I went back too far, 2013, and 2014. Let's say for our business, the trend for us has been, in 2010, our times interest earned ratio was 15. In 2011, it was 16. In 2012, it's 17. 2013, 18. And this year, it's 20. Since we like a good, strong ratio here, you could say our ability to pay our interest has been improving over the 5-year period. Let's further compare it with our competitors. Maybe our competitors have been running 14, and then 15, and then 13, and then 12, and then 11. Wow. When we compare with our industry, we see that we're better in every year, and while the trend is positive for us, it's been kind of negative for them. That should make you feel really good about this business, because not only are they having improvements in their times interest earned ratio, they're also outperforming the industry, who has been suffering a decline in this ratio overall. You've now learned several ratios for how to evaluate financial statements for a business. My high recommendation to you, and nobody's listening but you, is that you put all your ratios you learned this semester on one handy place on your notes in your final exam, and you write a brief explanation of what the ratio measures and its formula, so you'll be able to readily calculate the couple of ratios that I know are coming your way. I helped write the final, so you can rest assured that these reviews have been good and that you'll want to pay attention to all your ratios. Thanks a lot for joining me this semester, and I wish you the absolute best of luck on your final. But you're not going to need luck because you studied. You're here at the end of the review. You've held tight with me. Knock 'em dead. See you later.